Under Armour is plunging more than 20%. This is one of the worst stocks in the S&P. It's a new 52-week low. This after reporting an unexpected loss in its results. It's now down 55% over the past year. Lululemon down 6%, 7% today, but, holding up relatively better. It's down 30% from its record high. Adidas also hanging in there, but still sliding to a new 52-week low after reporting its results. The stock today down a little less than 4%. Sarah Eisen spoke with the CEO of Adidas and joins us now with some of the highlights weighing on everybody these days. Sarah?
Absolutely. This is a tough spot in the market today, Kelly, and Adidas earnings aren't helping the overall mood. And as CEO Kasper Rorsted told me earlier, his report was a warning sign, he thought, for every global market company right now because China is essentially shut down. If you look at the report, sales in China for Adidas fell 35%. Sales in North America were up 13%. China also led to a guidance warning from the company. So I asked Kasper Rorsted for more color on how the lockdowns there were affecting both production and consumer demand. Listen.
Our supply chain is completely intact and is manufacturing 100%, so we've actually no disruption at all. But today you have 45 large cities in China that are either in partial or total close down. So for instance, Shanghai has been in close down since the 27th of March, and that means there's basically no trading, hardly any trading. And that's what we're seeing. So it's consumer trading in the cities that are locked down, or also very, I would say, slow down, consumer spending in cities that are not locked down because, people are concerned of being impacted by it. So that's what you're seeing on the Chinese side. At the same time, you're actually seeing an adverse trend in the rest of Asia. You're seeing the rest of Asia opening up. We expect to be back to positive growth in the second quarter in Asia. And that means in the second quarter, 80% of our business are going to grow double digit. So that's why I'm saying you have a decoupling, a very healthy West and an economy in China that's impacted by the close down.
Rorsted kept using the word decoupling to describe the demand environment. As for supply, they're also dealing with higher costs. Well, he told me that 100% of the factories are operational at this point for Adidas. Problems remain in shipping. In fact, Rorsted said shipping is so bad that in the U.S., 25% of inventories are usually in transit. That's in normal times. The rest are ready for sale. Well, guess what? Now that number is double. It's about half of goods are in transit, making it harder to fill shelves and get product out to consumers. Rorsted said those shipping issues, he says, could last well into 2023 before they start to normalize. We'll hear more from the CEO of Adidas at 3 p.m. on Closing Bell, including, Kelly, his read on the consumer in the U.S. with all the market volatility and concerns around recession and slowdown. I asked him whether he sees any signs of that or any signs of it in Europe, which is much closer, of course, to Ukraine and the war there. We'll also talk in the 3 p.m. hour to the CEO of Under Armour, Patrick Frisk. As you mentioned, that stock getting hammered today on earnings and concerns mainly over, you guessed it, China and supply chain. Those were the two culprits for Adidas, and they are for Under Armour as well in those numbers.
Under Armour gross margins dropping. I think it might have been like 3 or 3.5 points. It is ugly.
It's ugly, and it's a profitability question, to your point, because I did talk a bit to Patrick Frisk, the CEO of Under Armour, on the miss, right? They reported a loss. They were supposed to report a profit, and guidance for the year came up short on earnings, but not on sales. So he says we don't have a demand problem. What we have is a shutdown in China, and what we have are higher supply chain costs. I think the bigger surprise on Under Armour, Kelly, is that it feels like a lot of their margin pressure is happening around the next quarter, which I think took people by surprise. A lot of the retailers and other companies have already been feeling it for a number of quarters now. Theirs appears to be happening a little bit late, so coming at a particularly surprising and vulnerable time for the stock, where you just have an excuse like that on profitability and the shares get pummeled. That stock is now at the lowest in September 2020.
Yikes. All right, we'll leave it there before we get any more bad news. Sarah, great stuff. We look forward to those discussions. Under Armour, by the way, an $11 stock right now.